Today on our Founders podcast, we have a very special guest, Nathan Beckard. If you can tell a little bit about yourself to our audience.
Sure. I run two startups. I run one called Foundersuite, and that's a platform for startups to help them raise capital. That's been around almost 10 years. And then we have a newer one called Funding Stack, which is for VCs and investment bankers and fundraising consultants. Both of them help companies raise capital, and that's kind of been what I'm doing ever since college. All I've done is help companies raise capital. That's my one-trick pony.
Nice. So how many years are you in the industry?
I mean, I'm not going to date myself, but a long time, decades,
Okay.
centuries. Um, no, I graduated in the 90s and then went to work in investment banking for a little bit and then worked in Silicon Valley in the 2000s, 2010s, and then started Foundersuite. So, yeah, been a long journey, but it's all been fun. All working with startups and all about the fundraising exercise.
Amazing. And are you happy with the path you chose for yourself?
Yeah, absolutely. I love startups. It's kind of funny. I mean, FounderSuite's a good company. We're doing well, but I started out working in investment banking, and I see people I started working with in investment banking who have gone on and become, partner at Goldman Sachs and stuff like that. And like I know they're making a lot more money than I am, but I also know I'm having a lot more fun than they am. So to answer your question, yes, happy with the path very much.
Yeah, that sounds like you're very happy with the industry you chose. Did it? And the question is, did you just stumble upon it, or were this something that you were planning to do or recommended by somebody else? How did you find yourself in this industry?
You know, I've always been attracted to entrepreneurship. I love founders. I love startups. I love the energy of new companies. Even as a kid, I was pretty entrepreneurial. Always had little hustles, selling martial arts equipment to kids on the school bus, or selling firecrackers, or I could get it, stuff like that. Right? I always had little semi-legal hustles. Um, so always felt like an entrepreneur. Went down the path of investment banking, which isn't really that entrepreneurial, but I was enjoying it because I was working with startups,
Okay.
going public and raising capital. But I always knew I wanted to start something myself. Always knew I wanted to be a founder. Just didn't have an idea until one day, a little tiny light bulb went off. I'm like, I know how to raise capital. I want to be a founder. Why not build software and tools for raising capital, right? It's like
Absolutely.
scratch your own itch kind of thing. So
So,
that's what led me here. Yeah.
okay, interesting. So how does that work? So is your platform, is it like software as a service type of platform?
It is a subscription service.
Okay.
Basically, we've built out the tools to match how fundraising works in the real world. So, step one, if you're going to go raise if you're going to go raise capital for your company, is to go build a target list of investors. So we've built a database of 150,000 investors, angels, VCs, family offices, everything. And so you would go in there, you would search that. We have an investor matching engine that helps, identify the right investors for your business. And then step two is, how do you get introduced to these investors? So we have a tool called Get Intro that helps you build those warm introductions to investors, getting in front of them, getting, your pitch heard. And then the rest of the tools like CRM, data room, pitch deck hosting, email tools, sequences, investor updates are all designed to kind of support the marketing of your fundraise.
Okay, very
Yeah.
interesting. Right, so let's go down the path of the questions I've prepared for you today. We have answered some of them briefly by this little warm introduction, but there's still plenty more to go. So the first one's going to be is before Fundersuite, you answered what were you doing, but my question is what shaped your understanding of fundraising in the first place?
Yeah, so I worked at a couple firms. One was called Piper Jaffray, Volpe Brown Whale, and then I worked with JP Morgan's private placement group. So that was helping later
Yeah.
stage companies raise capital. So I got, trained on how to raise capital at an investment bank, pretty well
Mhm.
known one. And I learned that skill, and that was out there in New York working there. And then I came out to California. I'm like, I could apply some of those skills, but help early stage startups raise capital. JP Morgan's not going to go raise capital for a Series A business, right? So I kind of took what I had learned in investment banking, took it to the startup world in San Francisco, started working with a bunch of different companies, helping them fundraise, which was always really fun, exciting, dramatic, stressful, you know. And then that was when the idea, like, I could build tools to make this process a little bit more efficient, more better, you know.
Exactly. Yeah, no, that makes a lot of sense. And okay, so you said you dealt with businesses before who were struggling to raise capital, right? So what do you think is the most stressful fundraising story you've personally experienced, either your own, if you ever raised capital for yourself, or one you witnessed, or maybe one you helped with?
The most personal question, or what? Yeah, I mean, we raised capital for Foundersuite. I can talk about that, at length. Like I thought I knew everything about fundraising. I knew how to raise capital. Then you get out there for your own company, and it was very hard. I actually tried 3 times to raise capital. Foundersuite was very early. I mean, it was barely an MVP when I went out to start to raise capital. And I actually went out once, talked to a bunch of investors, maybe 25, 30 investors, was not getting anywhere, like no bites, no interest. So I took a break, went back to work, working on the product, making it better, getting more users on it. Tried again, went out and talked to a lot more investors, and once again wasn't getting any bites. So again, took another break, like I don't know, I think it was like 6 months or so. Went back to the product, worked on it, kept grinding. At the time, I was kind of had a day job consulting to startups, helping to raise capital. I'd take my money from that, send it to a Polish development company, help build the product, right? That's how I was kind of financing it, right? It didn't have savings or anything like that. So I was using like cash flow from one business to fund the business. And then finally went out for a third time and like, I've got to raise capital. If I want to make this succeed, I can't like bootstrap this thing all the way, right? I'm not an engineer. I can't program, and this is obviously in the days before, Claude. So then I'm like, all right, third time's a charm. I'm going to go out. I'm going to talk to every single person in my entire network. I'm going to leave no stone unturned. I'm going to bug every contact I've ever made, call in every favor I've ever earned, and give it, the old college try. And if I still can't raise capital, well, that's a sign from the universe, like maybe I should go do something else. So I was like, I'm gonna just go all in on this, right? Mm-hmm. And did that, and spent another couple months raising capital, hustling hard, and ended up getting a lead investor, which is like the hardest part of fundraising. And then spent another month or so like rounding up the rest of the round from a bunch of angels. Yeah. So that's kind of my personal fundraising story with Foundersuite. There's a lot more to it, but it was not easy. Even though I knew how to raise capital and I've been doing it forever, once it's your own baby, you're out there showing your own product around and getting rejected most of the time. It's still really, really hard. So
yeah, that makes total sense. That's interesting. So you would say your personal journey was one of the most stressful fundraising experiences you ever had?
I mean, everyone's been hard. I really haven't had an easy fundraising experience. I worked with a company prior to launching Foundersuite called AutoNet. It was like one of the first ones bringing like Wi-Fi to cars, and it was really cool. It was like really a fun product to pitch because at the time, this is going back a little ways, but like this was really innovative. This was really radical to bring Wi-Fi into cars, right? We were like the first ones to do it. And people wanted to take that pitch because they're like, what the hell are these guys doing bringing Wi-Fi to cars and connecting cars? Yeah. So that was exciting, but still really hard because everyone wants to see, all right, do you have deals with General Motors and Ford? I mean, do you have deals locked up? There's always a chicken and the egg thing. Like, well, we kind of need the capital to get these deals in place. We're talking to them, but they want, lots of pilot hardware devices that cost money, right? There's always a chicken and the egg thing you're trying to solve for as a founder. And so every fundraising has been hard. There's been no easy ones for me, but they're all interesting. They're all kind of fun in some ways, painful in many. Yeah.
I mean, if you have the passion for this, then of course, every time, every new product, every new business is a new challenge, and you probably need different approaches for every single one. You can just go with the one proven to work system and apply it to everyone, right?
I mean, yes and no, right? So I think you're absolutely right that every fundraise is a little bit different.
Yeah.
And not to make this a plug for our podcast, but we have a podcast called How I Raised It. And I've interviewed 330 or so entrepreneurs on their fundraises, and every story is a little different. But at the same time, there is a pretty, best practices playbook, so to speak, of how to raise capital. So there's kind of like, there's the right approach with a lot of little variations around that. Does that make sense?
Okay, no, makes total sense. So you have one general strategy, how you're going to go after the funding, but obviously every business is different, so you change it slightly, adjust it a little bit. Make total sense. Okay, so what did you believe about raising capital early in your career that you now completely disagree with? What turned out to be false?
I think in the optimistic early days of my youth, right, you think, oh, just having a good business is enough. It's going to get funded, right? Good businesses are going to get funded. And that's not really true. Like you have to hustle and promote it and hustle your business, even if you have a good business, right? Like that automotive, Wi-Fi to the car, that was a really cool concept, very innovative at the time. Still had to just hustle like crazy to get funded. So that was something that was proven to be true. And I think this traps founders sometimes because maybe, founders are coming from engineering, they've launched products at a bigger company, they've seen those products succeed kind of on their own, but they don't realize that when it's their own startup with a company that no one has ever heard of, it's a lot harder, right? It's kind of the same way, like when I was working at JP Morgan, people answer your calls because you've got the name JP Morgan on there. When you're just an unknown startup, the hill is very steep and the rock is very large, and you've got to push it up there. It's much harder.
Yeah, interesting. Yeah, to be honest with you, I don't really know much about fundraising and the whole process and getting investments. We are, as a company, actually starting to, we're thinking about raising capital because we restructured the company quite recently, and we have quite an interesting offer, and we're just starting to lean into it and thinking about what we can do, how we can raise capital. So maybe you can actually advise me on something if you're going to give me out a free advice off the record. But yeah, that's very interesting to listen because right now it's very relevant topic of discussion for me.
Good. Yeah.
Yeah, if we can, if we, after the podcast, if I can keep you for another 5-10 minutes for the personal advice.
Download, yeah.
Amazing.
Yeah, absolutely. And I'm happy to do that. And we have a little webinar we've done called Funding Hacks that is kind of a step-by-step approach of how to raise capital, right? And just from very, very high, it's like an hour podcast, or hour webinar, but in very high level, it's thinking of fundraising as a sales process where you're building a funnel of investors, qualifying those leads, finding the right people at every fund, really identifying investors that are looking for your type of deal, your industry, your stage, your sector, that you fit their thesis. So building a pipeline of those investors, getting the warm introductions, getting in there and crushing the pitch meetings because you've been practicing and have really good pitch, really good, presence in the pitch. And then just getting momentum going for the round where you have a lot of investors, you're talking to a lot of investors at once, where you're getting some FOMO going between the investors that this deal is getting hot and has momentum, and then ultimately, pulling them in and closing the round out. A couple techniques for doing that, like using your data room as a forcing function to get them to kind of opt in or out. I mean, there's a lot of little nuances to it, but that's, in a nutshell, it's building a pipeline of investors and running a sales process with them. Relationship building sales process. So there it is.
Okay, okay. So most founders default to venture capitals, is that right? Or does it depend on the company stage and how it
Completely
all?
depends on company stage. If you're, I mean, I guess I kind of gave a little bit of a history of like when we raised capital for Foundersuite, but I had raised a little bit of money, I think $30,000 from my family,
Oh,
right? So friends and family is often the veriest early savings, friends and family, maybe any accelerator, grants you get, um, and occasionally credit cards are like your early sources of capital, right? um, you need to get something built, something off the ground. You need a little bit of money to do that. That's where the friends and family comes in. Then the next kind of layer is often angel investors, depending on what you're doing, right? If you're building something drug development or something like that, you're probably not going to go this path. You're probably going to go straight to VCs.
yeah.
But in many cases, software businesses, you're going to angels first to get another 500 million bucks, and then we get into the venture market where we're going after professional investors, right? So that's a pretty common pattern.
Makes-
Yeah.
Yeah, I mean, yeah, makes sense. So if you're quite early and you have a software business, venture capital makes sense. But then if you have proven and showed some revenue, if you're earning quite a bit of money, you can go to private equity to scale your business, right?
Private equity is going to come quite a bit later. I mean, that is a much, it's sort of like you could almost do a chart of like evolution of the business on one axis, sources of capital on the other, right? And as your business obviously becomes more mature and generates revenue and then eventually profit, you start to open up additional sources of capital. If you're going to private equity, you should be doing, you know, 30 million, 50 million plus per year in revenue and be EBITDA profitable. And the story, the pitch to private equity is really all about your financial numbers. Whereas at the friends and family stage, the pitch is about you, right? The pitch is
Yeah.
about you, what you want to do. At the angel stage, the pitch is more about like the vision of the business. What's this big crazy idea you have, right? What's the potential for this startup? At the
Yeah.
venture stage, it becomes a combination of the vision, you, the team, and usually some early metrics around like, product market fit, customer cost to acquire customers, lifetime value of customers, things like that, right? So as the hopefully I'm making this clear and not confusing, but as you progress down the path, it becomes more of a financial story, especially with the private equity guys and many VCs too.
Okay.
Yeah.
No, makes sense. So if I'm a founder raising right now, what's the most common strategic mistake I would be making before even sending the first email?
So there's about kind of the big three or so, big couple mistakes I see founders make over and over again. One is not putting in the time to do the research and really finding the right investors to go after, right? Like we have a database of 150,000 investors. It's very easy to search if you're in, medical devices or SaaS or fintech. We have tens of thousands of investors in those categories, right? But that doesn't mean every single one of those is looking for your type of deal. Some of them might be looking for something later stage. Some of them have more of an early stage preference, right? So mistake number one is not putting the time to identify the right investors. And the flip side of that is if you do invest the time and really identify people who are looking for your type of deal, your fundraising is just going to be so much easier. It's going to go faster. It's going to help you get momentum going if you're talking to people who are buyers for what you're selling, right? So that's one big mistake. I'd say the other two, I'll do them quickly, is having a bad pitch deck. I get on calls all the time with founders. Sometimes it's our customers, Foundersuite customers. If they're on like the platinum plan, I'll do a pitch deck review with them. Or I'm a member of this thing called Hubble where people can book me for a little bit for pitch deck. So I get on pitch deck reviews all the time.
Okay.
And they're almost always pretty bad. Like it's painful, and I'm like, oh my god, these poor guys have spent the last year building this startup, and they can't tell a story about what it is. I'm 20 minutes into it and I still don't understand what they do. It's confusing. It's like muddled, right? So,
Yeah.
and it's hard. It's hard to get a really good, crisp, clear pitch deck or pitch and story out. But
Mhm.
that's critical. You have to. You are competing against thousands of startups for investors' attention and time. And if the investor can't like instantly see in the first 20 seconds what you do and why it matters, why it's exciting, you're going to lose them and you're not going to get very far in your fundraising. So that's mistake number two, is just having a bad, confusing story. A good story tugs at my heart a little bit, has an emotional connection, has a story arc to it, and ideally a little bit of logical stuff too. It also makes me greedy, right? I'm like, I can see how this business can make lots of money. So
Okay.
that's number two. And then lastly, really quick, is the third mistake I see is, founders like doing a lot of like cold email, mass market, spray and pray email campaigns. We have a tool for that, but it's really designed for doing like, follow up emails to people you've met, stuff like that. If you're doing just like giant email blasts, you're not going to get very far. In
Mhm.
contrast, the warm intro, which I'm sure you've heard of, which is where you're tapping your network or building network connection paths to investors, is 30 times more effective than cold outreach. Not 30% more effective, 30 times more effective.
Yeah.
So, and that's really how fundraising runs. It's on the warm intro. So you've got to figure out ways to build those intro paths.
Okay.
Those are the big three.
Interesting. Yeah, that makes a lot of sense. So definitely, I was thinking about the pitch deck. That pitch deck is very important because you're essentially selling your product, and you need to at least make sure the person you're selling to understand what they're buying. And about the spraying and praying and emailing, so you say it's much better to send less personalized emails to a better client profile, to a better, investor profile, rather than just bulk mailing. Is that right?
100%. You
Yeah.
should put it, it's a two sides of this piece. Like I said, if you're putting in the time to identify, oh, this venture fund, if I'm, like I think of Foundersuite as kind of SaaS and FinTech. We're kind of on the border of both SaaS and FinTech. And if I'm raising a seed round, I
Okay.
really want to find venture funds that are investing in my type of business. Maybe they've done other deals. Maybe they've backed like crowdfunding platforms, or they understand kind of the same problems we're solving. Um, and they do my stage, right? And then I want to, in my outreach, whether it's the warm outreach or if I am doing cold outreach, I want to be very explicit and make it a really custom email of like, here's why I'm reaching out to you. I've studied your firm. I see the deals you've done in the past. I think we fit into your thesis really nicely. And here's why, right? It shows these investors that I've done the homework, that there's a reason I'm reaching out to them, that I know what they're looking for. Versus, I hate to say it, but I get investors coming to us sometimes like, hey, we've been getting just bombarded by like cold emails from people that say they found us on your database. And I got to tell managers like, you can't do that. You can't spam. You can't spam investors. It won't work.
Mhm.
People think like, if I just, you have 5,000 SaaS investors, if I just email all 5,000 this like ugly generic message, some of them are going to reply. It doesn't, and then they end up getting like blocked by Google for spamming, and they're like stuck. They're like, I can't email anyone now.
Yeah, I
So
know. Get it.
yeah,
My background is in email marketing, so definitely, I agree 100%. Yeah, that's amazing. I wanted to touch the topic of family offices because I honestly I don't really know anything about them, and you have mentioned family offices in one of your posts. Correct me if I'm wrong, but you said family offices account for roughly a third of global startup funding. Is that true?
from the research we've found, yes, I can't like verify everything's true or not these days, but yes, that's what the numbers are saying, and that's a big uptick from even just a few years ago. So family offices, I'll do the family offices 101. Essentially, if you're a wealthy person, you made money, maybe you had your own startup, that startup, got acquired or went public, and you
Yeah.
have a big, you know, asset chest, you might build a family office to manage your money. It's like you have dedicated investment professionals who are managing your family office, and that's basically what a family office is. Now, there are also multifamily offices for people who aren't quite as wealthy. You know, if you're 100 million plus, you might build your own family office. If you're 20, 30 million dollars, you might be part of a multifamily office. Anyway,
Okay.
those are just details, but it's basically just a very wealthy person or family's money. Um, you know, Jeff Bezos has a family office. The Walton family has a family office, right? Michael Dell family office, right? Dell Computers. Like these guys and gals have family offices. Family offices often invest in lots of different asset classes. They probably put their money into real estate, stocks, bonds, equity, you know, public equities, and then they often have a piece of the pie reserved for alternative assets. And that can be venture capital, that can be direct investments in startups.
Okay.
Um, and so it's this new kind of capital source, uh, kind of in between. I don't know if it's in between exactly, but kind of in between angel investors who are usually also wealthy people, but not as rich as family offices, and then
Mhm.
venture funds, which are institutionalized investors, right? Um, now, I'll pause there. I can go on and on about family offices, but I'll see if you have any
That's
other.
interesting. No, I get the idea definitely. How come they take third of the market? Is this just like naturally
It,
occurring thing? Or, yeah.
yeah, it's just a function of the rich getting richer in this country. I
Uh,
mean, it's just a function of like, you know, all these billionaires being created all over the world. Frankly, I'm not talking a U.S. phenomena, and
okay.
and that's what's built this big base of family offices. Um, you know, it's
Okay.
interesting. I mean, I don't want to say it's trendy, but it's kind of trendy to have a family office and start looking at, you know, different deals and stuff. Um, we've seen the growth of family offices, just the sheer number of family offices has really grown a lot, and the capital in all those family offices is huge. That's why it's, you know, by many estimates, about a third of the private capital market now. Whereas even just 5, 10 years ago, you never heard about family offices. It was very obscure, right? It's kind of come into its own. It's this trend that's, you know, pretty exciting, and it's opened up a lot more capital for startups. Now, here's the other catch though. Many family offices don't make a lot of direct investments in startups. They might be investing in the startup ecosystem by investing in venture funds. And so, you know, family offices tend to either invest in venture funds directly, or they'll do like a side deal. Um, you know, maybe they put money into a venture fund, and then this venture fund is investing in a pretty hot startup. That family office might also come in on that startup, you know, in an SPV or other type of side structure.
Mhm.
So I don't want to make it sound like it's like easy capital, because they tend to invest a little bit later stage and or indirectly through venture funds. But family offices do invest in startups, you know. It's a new source of capital. I just don't want to get people too excited about it because it isn't so much for early stage. Yeah.
Yeah, makes sense. Makes sense. So I would go down into the psychology of just generally pitching and trying to get investments. So the question is going to be, what actually makes an investor lean forward in the first 60 seconds of a pitch? What makes them interested?
Yes, this is a good question. I like this question. Um, I okay, so if you've done your research and you're finding investors that are looking for your type of deal, that really helps, right? uh, I love pitches. So again, you have to take a step back and put yourself in the shoes of these investors. They're getting 50 warm intros a day. They're getting 200 cold emails a day. They're sitting through 5 or 6 pitch meetings a day, right? So they're just getting like flooded with information. And so when you get your 30 minutes or you get your hour meeting, whatever it is, you got to capture their attention very quickly. Um, and there are a couple different ways to do that, right? I've seen some little showmanship things people have done, but a lot of times it just helps to start with your own story. what are you doing? Why did you build this business? Is there a natural story there? You were, in this industry and struggling to solve a problem. You solved it, and now you're turning that into a company, right? So, your genesis story is a pretty good way to capture attention. I love, and it doesn't apply to every startup, but I love pitches that have a bit of an emotional connection in that genesis story, right? If you're doing something for um, solving, building drugs for Alzheimer's or something like that. Talk about the story of, losing your parent to Alzheimer's. Like, kind of go in that. Like, I'm passionate about this. I lost my mom. She was very young to Alzheimer's. I'm just making this up, but, that's good. You're going to capture people's attention and then get into the more logical parts of the story. Like, this market's very large. We have something really innovative and defensible. We have some good traction already, some partnership deals, or pilot programs, and we have the right team to do this, right? And then it becomes like you've captured me with the emotional part, then you've satisfied my logical brain with showing me like these guys are real, they have financials, they have a product plan and roadmap, you know, and they're going to make a lot of money, right? So you're tapping into my fear and greed at the end, and that's a good
Nice.
story arc, right? Kind of appealing to both the emotional and logical sides and the greed side. I don't know where that fits of the brain.
Absolutely. Yeah. No, that makes a lot of sense. Okay, so you say narrative is actually good question. What's more important? Is it numbers or narrative?
Mm. Yeah. Well, in some cases, actually, I tell startups lead with whatever's your best point. Sometimes that's your numbers. Sometimes you might have a business that's, maybe not that sexy or glamorous, but your numbers are freaking killing it, right? You're able to turn $1 into $10 um, very quickly because you've got great, lifetime value of a customer and low cost of acquisition. In that case, just start with the numbers, right? I've even told startups to say, hey, your first slide, instead of getting into the problem solution or instead of getting to your team, your first slide is just your metrics, your numbers, and how you're crushing it, because that's also attention getting. Now, not that many startups have that, or at least not at the early stages. So that's where it's more narrative, right? Where it's the genesis story, the problem solution story, the future, the crystal ball story, where you're like painting a picture of where the world is going, right? You're seeing that a lot with AI and robotics and things like that. People painting this future of, where the world's going to be in a couple of years. So that's where narrative is a little more valuable. The answer is it depends, but there it is.
No, that makes sense. Okay, no problem. Let's go down the route of explaining a bit more about Foundersuite, if you mind. So, my question is going to be is what was the first version like? So you mentioned you've been grinding on the product and coming back and forth with the investors. What was the very first one that you came and
It's
pitched?
so embarrassing, and I forget who said it, but there was someone that said if you're not embarrassed by your first product, you waited too long to ship it or
Yeah,
something
yeah,
like that. Anyway, the first version was it's like it looked like cartoons. It looks totally crappy. It was actually original, very, very first MVP was a collection of all kinds of different tools. It was truly founder suite of tools, suite of founder tools. And I think we had an investor CRM. We had like a PR and media tracker, kind of like a CRM for tracking your press releases and media engagement. We have like a competitive tracker. We had an idea validation tool to get like feedback. So we had all these different tools.
right.
And the thing was, it was almost too many things. People are like, it's almost like if your company doesn't stay, if you're trying to do too many things at once, it gets lost what you're good at. And what people actually liked was this investor CRM piece for tracking investors. And then we added on investor database, and we kind of got rid of all the other tools. We rebuilt the platform and started with the investor CRM, added an investor database. I think a year or so later, added an investor update tool for sending out like investor updates, monthly, quarterly updates. Added a pitch deck hosting tool. I think that was next. Then we added a data room, right? Because as you progress down the fundraising, you're going to invite investors into your data room. And then I think we added email sequences and a get intro tool to build those warm intros. And now, of course, we're getting into some cool AI agent stuff because that's kind of the future. But that's the evolution. We started with a broad set of products, narrowed it down to the fundraising function, and that really changed the whole focus of the business and has
Okay.
allowed us to grow. Yeah.
Okay, that's amazing. Well, now you have raised 87,000, helped raise 87,000 startups over $17 billion. Is that true?
Well, the
Do you
numbers
remember?
are even quite a bit bigger. I think we're like 121,000 startups now have
Okay.
used our stuff, and I haven't even run these numbers in a while. The last time we ran it, it was 21 billion, and that's like probably 2 years ago. So we're probably closer to
Wow.
25, 30 billion. So it's lots of startups and lots of money have gone through our
Amazing.
platform. Yeah.
Lots of experience. Okay, so if you had 60 seconds to explain Foundersuite to a first-time founder, how would you describe it?
So very simply, it's an end-to-end suite of tools for raising capital. You come in, it asks you a few questions, it suggests some potential investors, you add those to your CRM, you go into our database, search for more investors to build a pipeline of investors, and then you use the get intro to get intros to those, use the CRM to manage all the tasks of the fundraise. You send out your pitch deck through the system, you send out investor updates, you invite investors into your data room for run due diligence, and then we have some documents to close the round. So summary, end-to-end suite of tools for finding investors, getting connected to them, managing the outreach and all the activities, and ultimately getting funded.
That's amazing. Okay, and where is the product go next?
As with everything, we're adding in AI, like sprinkling in AI into different products. Like, for example, our email tool, you can use uh, an API connection to ChatGPT to help draft your emails, things like that, to make them more personalized. So we're sprinkling some AI into the product. Our investor matching engine, which helps source some investors for you, is getting smarter and smarter. But what we're going into, and I can't talk too much about it, is AI agents that are doing a lot of the work for you, right? Fundraising is still very manual and painful and time consuming, and so we're building agents to do a lot of the stuff for you, and that's where we're going next. It's an
That's great.
exciting
Yeah.
world. We're
You have to adapt. Yeah, you have to adapt with this new era of AI. You have to start implementing AI everywhere. And is that true? I kind of saw some short comedy videos started seeing comedy videos on social media about new products coming out and startups like, oh, we built a great product. And the client is like, okay, I just need a product. I don't need any AI in it. And there's investor, add AI, or I'm not investing. Like every investor is looking for something AI supported or driven at the moment to be more willing to invest.
It is. It's a crazy world, and I do see some good companies that aren't really AI companies
Okay.
getting ignored. The pendulum is way over in the favor of like AI startups, and that's
Makes
probably
sense.
hurting some other good companies. I mean, it's kind of like when I was around when the web 1.0, web 2.0 really took off, and like suddenly everything had to be, web, and then mobile, and then social. Or I mean, you've seen these waves. AI is definitely one of the biggest ones of all the waves, but it's really similar to like the .com era in many ways. So,
Right. Okay. No problem. No, that makes total sense because once again, we are developing. Everybody adopts AI, and people just think probably investors are scared that if a product doesn't have AI in it, it's just not going to work out. It's not defensible. It's going to lose to other competitors who are utilizing AI, which probably makes sense over long term.
yeah.
Okay, so how important is personal authority when you're operating in a trust-heavy space like fundraising?
What do you mean by personal authority?
So, to develop a question, when raising for other startups, do you utilize your name, your personal brand and name, doing it?
Yeah, so for sure. And it's pretty hard to not, it's pretty hard to disassociate your name and brand if you're doing that. And that's why, it's one of the tough things. Like I get asked all the time by startups, by our customers, like, "Hey, can you help me raise capital for this?" And there's two reasons I have to say no. One is people don't really understand what they're asking. That's a huge ask, right? If you're asking someone to help you raise capital, you're asking for hundreds of hours of my time in many cases, right? So I don't have the time. But number two, you're also asking for people to put their credibility on the line to vouch for your company, And I have nice people I meet, they're customers, they're paying us, and they seem like good people, but I can't in a half-hour Zoom call, I can't tell you if this is a super good company that I want to put my credibility behind, right? Because if I'm out there talking to investors and promoting a company, and it's my credibility on the line. If this company turns out to be not very good, or the founders are not very good, those investors aren't going to take my call next time. So when you're asking people to help you raise capital, you're asking them to spend their social capital that they've worked hard to build up over years. So that's a big ask. That's a big ask.
Okay, so you normally never do it.
Oh, I mean, I have helped multiple companies raise capital. I'm advising a couple right now, but they're ones that I've gotten to know over a longer period of time. I think the problem is where, I meet someone at an event or they sign up for my platform and we hop on a Zoom call, and then it's almost like they're skipping the dating part. They're asking for marriage right away, right? We just met and they're asking if I'll go help them raise capital. The ones I'm advising, I've known for a couple years and gotten to know the founders pretty well, and
Okay.
that feels more comfortable, right? So
Fair enough. Yeah, no, that makes sense because your authority is online. So if you kind of putting a word behind and your credibility behind pitching a product to investor obviously trusts the product more because they trust you. Is that right?
totally, yeah.
Yeah.
Investors, why does an investor return your call? Either they are so impressed by the metrics of this business because you put that in the subject line, or they trust you, right? Because
Okay.
you're making the introduction. But that trust gets eroded pretty quickly if you're pitching bad deals, you know,
Makes sense. Yeah.
very
Yeah.
quickly. Yep.
Definitely. Okay. The final question for today is going to be if we have this conversation 12 months from now on, sorry, let me restart. We'll cut it out. If we have this conversation 12 months from now, what needs to be true for you to say this was a breakout year?
Yeah, I think, it's going to be a kind of an obvious answer. I'd say we've fully gone AI. Um,
Mhm.
Now, when I say fully AI, it doesn't mean we're going all the way, but we're coming out with AI products. We're going to have our traditional core tools. But I think 12 months from now, you're going to see a pretty cool additional offerings and products from us that are very AI native, and that will be a success. And I think that's the way the world is moving. And I think we have a pretty good idea of where to go, where the puck is going next, so to speak, and we're going there. So that would be my answer.
Amazing. Yeah, amazing. It was a big, big pleasure meeting you and speaking to you, getting your insights. I'm sure our audience gained a lot of knowledge and have a bit more sense of direction raising capital if we have any startups watching. Thank you very much for your time, Nathan. I hope we're going to have another one maybe in a year and you're going to tell us how much more you've done and progressed.
That'd be fun. That'd be fun to come back a year and see what's changed. Absolutely. That'd be
Thank
great.
you very
Thanks for
much.
having me, David.
Thank you.